All right, everybody, I think it's time, so we will get started. Usually we start, if you haven't been to our group before, we start with quick intros. So we just go around the table. Everyone can say your name, kind of what you do in the real estate field, and we do a give and an ask. So a give is like, could be anything interesting you've learned, good book, good podcast, something, if you have like a little quick value add thing for people, and then an ask. So if you need anything professionally, like if you're looking for an investment property, a connection, whatever the case may be, so that hopefully we can try to connect you or answer your question. So I'll go first. I'm Maura McGraw. I'm an investor, an agent, and I run this group. And my give is last week I was at a real estate conference with a bunch of other real estate business owners. And the focus was planning for 2025. So we got some really good planning documents, like business planning and assessment documents leading into 2025. So I'm going to post those in the Facebook group. So if you're starting your 2025 planning right now, you can steal those and use them for your business. My ask is we just had a listing go live this morning. So it would be a great either short-term or long-term rental in downtown Mobile. So I'll post that also in case you or anyone you know is in the market.
Hi, my name is Marcus Walker. I'm also a realtor here on the Eastern Shore. My give. So I really enjoy Calendly. Are y'all familiar with that software? If you're not familiar, it's pretty much just like an automated scheduling system. I don't know. I couldn't think of anything else. So use it if you want. It's free. My take is I'm a realtor. So if you need to buy any help buying or selling, I've been here all my life. So I'm pretty familiar. And yeah, here you go.
Thank you. My name is Caroline Cho. I'm with Revitalize Realty, a property management company. My give for today is make sure when you're doing your real estate investing, no matter what kind of investment focus you have, that you build out your team well in advance or as you're searching for your deal, because you want to make sure you have the right people lined up so things moves a lot smoother than last minute, hey, I need somebody right now. Because then it can kind of throw a wrench in things if you don't have it lined up. And the one I have is actually, if any of you have rental properties and are tired of managing yourself or tired of your current property manager, we are running a promotion for just you guys. We are doing a flat fee of $99 a month for your management fee instead of 10%. So if you're interested, know someone that isn't here right now in our group that would like to have a consultation, let me know. Happy to help you guys.
How long are you doing that deal?
Probably until the end of the year. Okay. If you get a rental property.
Okay. All right. Hi, I'm Maria Oliver. I am also a realtor. I work primarily in Mobile. I mean, I can do both sides, but I'm primarily focused in Mobile. My give, I guess, well, the same answer as you're a realtor, but I would like to focus on the veteran community. So if you know any veterans that are looking to buy and sell, just as a veteran myself, I want to break into that community. I want, I guess, just to learn what's going on today. I mean, I'd like to learn more about the storage stuff. So yeah, there's my one, I guess. There you go.
Good morning, y'all. Cody Hitchcock with Florida Business Development Corporation. So we're an SBA 504 lender. Basically what that means, we take government money, we partner with a bank, and we help you buy owner-occupied commercial real estate at much better terms than you can get from a bank alone. So yeah, that's what I do. I give, if you haven't read the book Raving Fans by Ken Blanchard, I had that reiterated to me this week. There's a philosophy in there. You don't have to make big drastic changes to improve yourself. 1% that you stick with over time, just get better by 1%. And as that compounds and you stick with it, you're going to be head and shoulders above everybody else around you. So that's my give. My ask is if you know any commercial bankers, everything we do I partner with a bank. I can't do it alone. So any introduction to commercial bankers around here on the Eastern Shore would be much appreciated.
Hi, I'm Kathy Bulvin. I'm new and learning. I guess my give would be a couple things is keep showing up and keep building your network, because that's proving to be very helpful in my journey, as well as personally, I have found that even though I'm new and I'm not as more experienced, I can at least, the people I've met, I've been able to help make connections with other people in groups like this and outside this group from people I meet in these rooms. So that's my give. And my ask is just anybody who might be looking for a new person that they want to bring on their team that could help in any way.
Okay, well, I think I must be the odd man out because I'm not in real estate. I'm actually, or was not. I'm a retired high school math teacher, so if you need some computations, call me. I'm sure I got your back. But I have had rental property for a number of years and am actually interested in developing some short-term rental here and maybe probably doing some wholesaling. So my give would be I'm here to learn and to network more and just to meet everybody. And so one of my favorite people is John Maxwell. So if you're looking for some great reading and some challenging things for yourself, I'd say go find a few of his books and zero in on them.
My name's Kevin Ward, and I've got a ground-up modular multifamily project going on in Oak Creek, Colorado, which is near Steamboat Springs, near the ski area. And hopefully break ground relatively soon. My give is, and it pertains really not necessarily to real estate, but if any skiers here or snowboarders, if you need any advice as to where to go, I can definitely assist in that. My ask, always looking for competitive bids for financing for my project.
I'm Reiko Suzuki, and my husband Kevin and I have been in this Panhandle area about 2 years, little plus, and I own several rental properties, and I might talk to you. I have one in Alabama too. I don't manage, but so I think a few years I have been I invest and I look for always partners, and I rent, private lending also. Lately, just 2-3 years I have been in this. I am a software engineer, retired software engineer for whole life. So this life is very different. But one thing I have been learning, mindset is most important to me. I mean, just, you can overcome so many, challenges. Even, I have been learning only a couple of years, but, and then there is so much to learn. But also I learned just mindset is just so important to me. And I think that's it. Thank you.
Mm-hmm. Stacy McElroy. I'm a police officer in Gulf Shores, Alabama, obviously. I've been a police officer for 26 years, and I'm a real estate agent on the side with EXP. My wife and I just sold our short-term rental in West Beach. Finally closed on it, finally. And we're doing a 1031 into, hopefully, storage units. I guess my my give would be, since I'm looking at storage units, I started listening to a podcast called Self-Storage Income by A.J. Osborne. Seems pretty good. Like I said, I'm just getting into it, just trying to figure it out. And I guess the other one was, I have 2 beach condos for sale that are not moving. So if you have anybody wanting to buy a beach condo like every other realtor down here, then send them my way. Not Amanda's way.
My name is Marco Toledo. I'm a realtor as well, and entrepreneur. My give is ChatGPT. I think that's a tool that a lot of real estate agents and for any business, I think it's gonna be a real good tool to have. I've been I've signed up for that, and it's helped me a lot. And it's cut costs for me. This is my wife, Luisa. When I'll let her. And then I guess my ask is, we're looking for investment properties for myself, for my investors. We have some land that we want to develop, so we're looking to maybe get a lender that's with real good rates so that we could develop those properties in West Mobile. And I guess also asking for lenders on our other business that she's going to share with us.
Hey, my name is Luisa Fernanda. I am the owner for Cleaning Business. We're working at the beach in Gulf Shore, Orange Beach, and Fort Morgan for almost 7 years. And we try to, in a couple of months, one investment. We're talking about the self-storage or one big laundry. So, what is it?
Ask.
Ask me to take that from you. My name is Stuart LeGroux. I'm an associate broker with Omega Properties in Mobile and Argus Self-Storage Advisors broker affiliate. We cover and are licensed in Alabama, Mississippi, and Florida, cover the panhandle of Florida. My give is I'm going to give you some of my knowledge in the self-storage business, and I guess my ask would be if you need any assistance to reach out to one of us.
Hi, I'm Sharon Wright, and I'm with Mega Properties and Argus Self-Storage Advisors, just like Stuart is, and we're always here to help any way we can, answer any questions. My give would be if you're interested in doing just commercial real estate and you need a coach, Rod Santamassimo and the Massimo Group is excellent. My ask is that you keep us in the loop on some of the investment properties that you may have, because we may be interested in those as well.
Thank you. I'm Bill Barnhill, and I'm the president of Omega Properties, and fortunate enough to have these two experienced brokers working with me. And we own and manage certain properties, mostly self-storage, own and manage them. We broker them. And I'll explain a little bit about the Argus Self-Storage Advisors. That's an affiliation of about 45 brokers nationwide, and we each have a territory for self-storage. And we cover the southeast, basically, Panhandle of Florida, and Alabama, Mississippi, and some in Louisiana as well. And I'm going to do give and take when I speak today, so I'll hold that for that time. Thank you.
My name is Evan Templeton. I'm a realtor with EXP Realty, and I'm also I head up the sales and marketing for a little company that we have called TCI Property Group, which is just a real estate investing company. I handle all the seller marketing, contract negotiation, help get stuff listed once we're done with it. And we've been doing that for about 3 years. I think we've flipped about 25 properties in the past 3 years. So my give today is if you want to know how to make money on a flip, I can help you with that. Also, if you want to know how to lose money on a property, I can help you with that. And then ask is we're always looking for deals. Everybody is. But we're also looking for lenders, for individuals who may have money in the bank that's sitting earning 4 or 5%. Maybe you want 10, 12, 15. We work with folks, individuals, to borrow and to get in on the projects and see the progress and put your money to work at a little higher rate than what most folks are doing. And if you need lenders if you need what are called hard money lenders. I used to work at a bank here in town, and so I'm very familiar with lending and metrics, and we've borrowed on a ton of deals. So if you're looking to work with a bigger institution on a deal, I'd love to help you make some connections and introduce you to some folks. But that's all for me.
Thanks. My name is Luke Dunaway. I work with Evan here. I guess I'd mirror his give and ask on the real estate side, but I'm a licensed home builder and general contractor, doing mostly residential work with our flips here. So if you have any questions on that, how much I could help out there, but have some experience. Would also love to give away a condo as well down in Gulf Shores, so interested in that. Well, give away for a small fee, I guess my ask would be, Mira Evans, but, off the table would be, if anyone has any Bitcoin interest or knowledge about that, I'm interested in that. Not a whole lot of people around here into Bitcoin, so I don't know if there's a place for that, but I figured I'd throw that out there.
Hey, I'm Dustin Patterson. I just moved here from Illinois about 3 weeks ago, so I'm still learning the area and a lot of the market and stuff around here. But I got some buy and holds back in Illinois, and I'm just looking to learn the area, and I might get into some buy and flips here. So my give, most of y'all have more experience than me, so I guess hustle if you wanted somebody to help you, but and then, I'm looking for wholesalers or contractors and stuff like that, and just information on flips and stuff like that. I'm wanting to get into that, so that's me.
Hi, I'm Rob Schell, and I'm a tax specialist. I help commercial property owners anywhere in the U.S. save money on taxes. I do cost segregation, 179D, R&D tax credits, some interesting things in the drywall industry, and some other interesting applications. So I'm getting away. I work a lot with cost segregation, but I'm really layering a lot of products and services to help clients with their specific needs, depending on what they're doing. My give, if I had, as I listened to everyone around the room, kind of the mindset that Rika was talking about is a year ago, I was running real hard, and I still run real hard, but I take about an hour and a half every morning when it's dark, and I drive 5 minutes to the beach, and I watch the sunrise every morning. And I can't help but feel that has changed my life in the last year. I think I'm mentally and physically in better shape, and I'm able to work and be productive for my clients as well at a better level and a higher level than I was a year ago. So I'm very grateful for that. My gives, my asks are, I don't know, things are going well. I'm speaking at an SIOR event in Orange Beach on Monday. I'm looking forward to a fun Blues Brothers skit we're setting up. So that's kind of like, okay, how's that going to go? So it's kind of fun and just having fun with the business and helping clients.
Thanks. Hi, I'm Amanda Eckert. I'm a real estate agent with Real Broker, and I'm also an investor that does flips and a few buy and holds. And my give today is a reminder that we have this new BOI filing due this year, which I'm not an accountant, but I just finally did mine for any LLC and S Corp that the penalties are pretty big for that. So quick reminder if you haven't done that yet. And then also, I guess my ask is I have a client looking for a 2 to 3 acre parcel of land that they want to be able to build on, not residential, so unzoned preferably, pretty much seen everything on the market. If you know of anything, that would be great.
Where
Fairhope, Daphne, between Fairhope and Foley, but Fairhope area ideally.
Awesome. Well, thank you, everyone. Self-storage has been one of our most requested topics. So I'm so grateful to Bill and Sharon and Stuart for coming today, because literally this has been probably the top most requested topic that people have wanted to learn about. So with that, I would love to hand it over to you so that we can learn from these guys who are probably one of the very best in the business.
Thank you, Maura. Turning out here, listening to us. What I'd like to do is, it would be part presentation, but I want it to be a lot of conversation, a lot of dialogue, questions and answers, because I know that's what you're looking for. You're looking for some answers to what your questions would be. And I would reiterate a little bit about Sharon here. She's a CCIM, very experienced broker. She's done a lot other than self-storage, but we're primarily focused on self-storage. And Stuart here, he looks about as old as I am, but he's really my son-in-law. And Yeah, that's right. Well, I can't say that. Y'all, you're right up there at the top. So we're fortunate to have these guys working with me. And we did mention a little bit about Argus, which is a marketing company, and they do a lot of back office stuff for us, analysis and in the brokerage area. They do analysis and marketing packages, and we pay a fee to be part of that. And they're, like I said, there are about 40 to 45 brokers at any given time that do that. And we own and manage storage. And so I'm going to talk about why I got into storage and how that developed. It was kind of serendipity the way I got into it. But, and then Sharon will follow with some information and analysis of how you value self-storage and how certain expenses like the insurance and real estate taxes impact value. Now, a lot of you know about valuation, but there's some peculiarities about self-storage as well. And then Stuart will talk about the market, how the market's being impacted by some overbuilding, particularly in our area. Not quite as much on this side of the bay as over across the bay, but nationally, there's a lot of overbuilding. And that's not to say that storage is still doing well, but for instance, in Alabama, the average occupancy rate's about 80%, whereas it was probably, 2 years ago in the high 80s or maybe around 90. So occupancies have fallen, prices have fallen, particularly in the overbuilt markets. But this is something that as market demand and supply equilibrate, that, we'll get through this and it'll be good again. And it's still good because we got into it a long time ago, and the cost that we have in them as owners is low, and we locked in low interest rates, around 3% for a few more years, so we're in good shape there. But I started in real estate in 1976, and for years I did general brokerage, I did land development, just anything I could do. And we had some of you may be familiar with the Real Estate Exchange Club in Mobile. It's now called the Mobile Investment Club. And that's been around for a long, long time, even before I got in real estate. And when I started out, there were at least probably 100 brokers in Mobile, commercial brokers, chasing the same deals. And I said, gosh, this is tough, because everybody's fighting to get the same deals. So I really, at that time, I said, I need to find something that I can expand the market area, and I can find something, I didn't know it was storage at that time, but something that was a growing industry, and also something where you could raise your rents more often. You're not locked into, for even 12 months. You can raise them every 30 days if the market will permit that. But fast forwarding a little bit to the late 80s, does anybody remember the Resolution Trust Corporation? Look at there, he's old enough. Well, they called it the RTC, and in the late 80s, after the Reagan Tax Act of 1986, which had a lot of impact on depreciation and interest write-offs in real estate, a lot of properties went under, and S&Ls went under with them. About 800 or 900 S&Ls were taken over by the U.S. government and put into the Resolution Trust Corporation. And the RTC had to dispose of these properties. That was their mandate, get rid of these properties. So they had a big auction in Mobile, and it had hundreds of properties in a book that thick that they had, I guess, foreclosed on. And they had that auction in Mobile, and it probably covered 4 states. And I went with 2 friends to bid on a property in Bay Minette, and it was a S&L that had closed. I think it was First Southern and Long. And you might, if anybody's old enough to remember that, but at any rate. So when we walked into the building, there were hundreds and hundreds of people there. First person I saw was the head of real estate with Alabama Power, and I knew him. And I said, "Oh, what you bidding on today?" And he said, that office building, that S&L in Bay Minette. And I said to myself, uh-oh, we got a big bidder there. So the guys with me, I went back and I said, look, we're not going to outbid them. So let's just make it hard on them. So we bid more than we thought we would ever pay, but of course they got it. And then here's the way it happened that I got into storage. Another property came up, and it turns out I knew about that property, and I knew that a friend of mine who had gotten foreclosed on, he had a large 60,000 square foot office building, and when they built it, the pilings that it was on, and it was a lake it's on Azalea Road, had a lake, and the building surrounded that. And what happened is some kind of insects came from wherever they got those pilings and ate those pilings up, and everything started just sinking. And Lincoln National had the loan on that, and they had to foreclose. So it put this guy and his partner in bankruptcy, and he lost that lot that was next to it. So when it came up for auction, and it was about to go for $25,000, and mind you, it was 3 acres at about well over $125,000 an acre was what his loan was, almost $400,000. And so I looked at my friends and I said, we need to bid on that. And about the time they said, going once, going twice, and I said, this going for $25,000. So I said, can we bid? And we'd put up some money to be able to bid. So we bid and we got it for $38,000 cash. So it was a great deal, 10 cents on the dollar. So what do we do with it? Well, I'd been thinking about self-storage for a while, and so I knew a guy who was developing self-storage. He had developed one in Mobile in Tillman's Corner. So I talked to him. I said, you need to buy this. We can give you a really good deal. And that didn't work. He said, let's develop it together. So he developed it. I managed it. I got it about 40% rented. And guess what? A real estate investment trust came along and bought it and paid us a handsome profit. So I said, I think I'm hooked on this business. I think I found my niche. And so that's really how it happened. And since then, I've been developing, building, buying, and then I'm in the phase now where we've sold several, and diversified some of the profits with 1031s into retail and some flex space and stuff like that. So one thing I would like to mention, I wanted to give you that story because it was easier to get in storage back then as well. You could get a 90% loan to cost. Now it's 60% typically with your new projects. And another problem is, we even had some we did 100% loan. We never put a dime in it. You can't do that now. And interest rates are a little higher now, so that and there's a lot more competition. When I started, if you built one, you could pick almost any land in an area with people and build it and run a Yellow Page ad and fill it up in 6 months to a year. So storage was not in its infancy when I started in the 90s, early 90s, but it was a teenager. So this business has grown, and it's been almost exponential. But now, you have these ups and downs with the economy, like in 2007 and 8, the recession, that impacted everything. But storage really was more resilient, and some say recession-proof. I call it recession resistant. And so I'll save the part about how self-storage is doing now for these guys. At this point, I'd like to let Sharon take the floor and talk about valuing self-storage.
Thank you. You can put it on the screen. So Stuart's going to pass out what's going to be on the screen. I don't know which would be easier for you to see. Probably not the screen. So this is an analysis that was done on, it's a facility in Georgia. It was like 91% occupied and about 231 units. And so if you look at it, the gross potential income, if all the units are full, that is the gross that they could expect, was the 185,472. And then if you take the vacancies that are in place or any discounts or credit loss to get the gross rental income, and then sometimes you have late fees, some sell boxes or rent U-Haul trucks, and then you have tenant insurance, which is a big thing. You should have tenant insurance, require your tenants to get insurance, and then usually you get about 50% of that. And then this particular facility did have U-Haul income and on there. And then you get down to the effective gross income. And we're basing it on January to December, or a trailing 12 months. In this case, it happened to be a calendar year. And so the income stays the same on the actuals and the adjusted. We don't think that's going to change. Had they not been doing tenant insurance, then we could have adjusted it and it would have changed. And then you get down to the operating expenses, and we kind of look at the area as well as how it's being managed and that sort of thing. And we look at national averages as well. And you can see where we adjusted the marketing and advertising from $467 a year to $3,000 a year. Obviously they were not doing a lot of marketing. And then the bank credit charges, and then you see the insurance. Well, obviously that's in an area that's not as hurricane prone, storms as ours. Here, that would possibly be $25,000 for this facility. It's like a 26,000 square foot facility, which makes a huge difference, as you all know, in the value that affects the whole value. And then subscriptions, and then we removed the off-site management fee because we feel like for this size facility, the owner's probably managing it themselves or is paying an on-site manager. And so if you look down on on-site management and payroll, we plugged in $30,000. And then you have repairs and expenses, and then taxes obviously can affect. So insurance and taxes are your two biggest items that can affect the change in the value. And so if you get on down to the total operating expenses and then your net cash flow, for this particular facility, based on where it was located and the condition and age and all of that, most likely would be valued at a 7.5% to 8% cap rate. So your value is in the 1.3 to the 1.4. If it was Class A in a great location, maybe 6.75. And then when you see the really nice big Cube Smarts and those sort of thing, those may be they were in the 5 a couple of years ago. Now they're maybe in the 6% cap rate. So that's where we would get the value from. We would let an owner know that this is what we think it would sell for. And then it would be up to that owner to say, yeah, I like that number, or no, I want to try to get my income up. And the way you get the income up is you have to raise the rents and, reduce your expenses.
Sharon, some people might not know what a cap rate is, so if you want to.
Yeah, you would take the that net operating cash flow, the $107,000, and it's, divided by that 8%. To get the 1.344.
The 8% is what is called the market cap rate.
Yeah.
I know most of you probably know that, but some of them don't.
So questions on any of this?
The cap rate, I know it's based off of these numbers, but do you have, the ideal cap rate, in a more robust market, it usually tends to be lower. Is that a number that you're looking to get, or is it a number that your numbers give you?
In a really good market, you're going to have a lower cap rate, so your value is going to be higher. So you want to.
Buses, like,
Yeah.
like, for example, Mobile, I would assume, based off of, my experiences, the cap rates are lower there because of a bigger city, more, more traffic and, higher population, whereas compared to like Atlanta,
Yeah.
the cap rates are usually tend to be lower. But are you looking for a number, like, for example, 6 to 8%, or is it the numbers that you're getting from the analysis that you're saying, well, the cap rate's this?
Well, I would say in Mobile, it's just like over here, it depends on the property, the location, the size, the condition, the age, and the occupancy.
Yeah, I can
I mean,
add to that.
Yeah, go ahead.
The cap rate is what we call a market value cap rate. There's other cap rates that appraisers use, which operate a little bit differently, but market value, that's what people will pay because that's the percent return they would get as if it's an all-cash deal. So if someone wants a 5% return on that net NOI, then that's the cap rate. So we kind of know from dealing with a lot of people, a lot of buyers, and what the sales are, what those cap rates are. So it's easy to value that way. And you're right, though, about the cap rates being different in different cities. And it depends also on the quality of the real estate, of the storage. If it's one out in a tertiary area, out in the Pine Grove or in the Pecan Grove, that's not paved, doesn't have all the features, might not be gated, that one might be 8%. If that same property were in the city and it were paved, had all the bells and whistles and features, it might be 6. Cap rates have gone up some and valuations down lately because interest rates are higher, because when you get a loan, you want to make a spread. Your cap rate should be higher than the loan so you can make money on the spread on that amount of the loan. So for instance, it's good to have about 2% spread between the cap rate and the interest rate. With interest rates being 7.5%, 8% now, you'd want to have about a 6 cap rate if you're an investor.
Could you guys, are you, maybe just to give people like a benchmark, are you seeing, like, what is the average kind of like going in cap rate for a storage facility that you're seeing in Mobile? Just so people might have like a general idea of where the going in cap rate is kind of right now.
Yeah, well, I mean, it varies based on what Bill just said. If it's a really quality facility, it's going to bring a lower cap rate than one that's, the quality's not there, or it's a smaller.
So I'm taking the CCIM course right now, and I haven't taken it in a year. I have 2 baby girls, so it's been like really hard to get back into the studying on it, and business has been well. But do you call around other sales to get the cap rates to kind of like give you an idea of what you should be looking at? And because that's what I'm saying, like, is are you getting, why not 4% cap rate, or a 10?
Yeah, a seller would love the 4%, but you as a buyer prefer 10, so it's just kind of a balancing act on, what a seller's willing to sell at as far as their cap rate goes and what a buyer's willing.
And so basically you go around and find the sales and what their cap rate was to say, hey, look, you're gonna get around this kind of cap rate, let's shoot for this to sell. And then for a buyer, you kind of you're considering the buyer's perspective as well to put a number and a valuation, a cap rate, obviously with the numbers that you get from your analysis. Is that?
Yeah.
Would you agree with that?
Just to piggyback off of that, the vacancy rates, is that vacancy rate a number that you put in your valuation, or those are real numbers that you got from your P&Ls 3 years ago?
That's a real number.
Today's real number.
Yeah, is that today's real numbers, and then you factor in what today, the vacancy rate for today's numbers for this year, and you incorporate that in your analysis?
Yes, and we project for the next year, 2 or 3 or 4 or 5. If we're doing a 5-year cash flow analysis, we project what if let's say if it's a 75% occupied property, we might project it to be 80% next year, 85, and so we would do if you're in the, congratulations on being in the CCM program too. If we do 5-year cash analysis and do the internal rate of return and that sort of thing as well. Do you get this back?
Oh. I was just going to ask, when you were talking about the adjusted revenue, you said something about them having tenant insurance, so it's not adjusted. Could you just tell me what you meant by that?
So some facilities have insurance that they require that the tenant carry on their contents.
Okay.
And when you will have a separate company that you buy the insurance from, or they get the insurance from, and you get revenue from that. Usually 50%, they share 50%. Like, let's say it's insurance is $10 a month, you would get $5 of that for each one. And so it can make a really big difference in your value if you have tenant insurance.
When you go in to try to invest in a self-storage facility, I can't help but think you need to understand what's going on in the community. You need to be looking at county records, what's coming in the near future, maybe multifamily developments, looking at all those types of projects as you start to lay in these investments. Is that what you guys do? And if so, how do you connect up with the types of resources that help you make good business decisions?
That's a good question.
You want to say that?
Well, I would say that for me, what I'm doing, we kind of keep up with what's going on in the market. I mean, we know that there's a development that's about to take place, or you can ride around and see where all the construction is. I call my buddies at D.R. Horton. What do you have on your books that you can tell me about that's planned in that area? And there's 500 new homes coming here. So yeah, you do the best you can in trying to keep up with it. And then Argus, part of what they do, they will do research. I guess it's through Yardi that sends us other planned self-storage developments that are either in the planning stage, under construction, approved, or what. So we also look at that.
So is it kind of like the feud between McDonald's and Burger King? Like if you see one go in, you go, oh, let's look at that market and let's maybe put one in close by? Do you do some of that?
Well, no, I don't think so for that.
I'll touch on that.
Yeah.
Well, I mean, it's, and I'm going to touch on it in a few minutes about some of the overbuilding and saturated markets we've seen. Just because somebody went and built one doesn't necessarily mean there's demand for it. And what's happened, and we're seeing it now, is where markets, they're just dumping. Mobile, for instance, there's been 300,000 rentable square feet facilities put in the market in the last couple of years. And I mean, that's impacting the ones we own. Our occupancies are down, demand is down, there's more competition. So it's not necessarily that the market needs it. And that's the thing I tell people all the time is if you don't know what you're doing, and I'm not saying you don't, but if this is new, go pay someone, we were talking about this, go pay someone to have a feasibility study done, which usually runs $5,000 to $7,000 before you go make a potentially $2 million mistake. And we've seen it. We've seen it happen. We saw it, back in 2008. There was a facility that somebody built. I don't know if they got a demand study done, but they built it on the north side, if anybody's familiar, in downtown Birmingham, on the north side of 2059. And Bill and I were driving around that market, just looking one afternoon, and we thought, this isn't the best neighborhood for storage. These people don't need self-storage. They probably need more type of assistance. And of course, the people that built it, they were architects out of Atlanta that I would have thought knew what they were doing, and they lost it. It went back to the bank, and of course, one of the largest operators in Birmingham came and bought it for, pennies on the dollar. Now, I think long-term, he has done well with it because of what's happened in downtown Birmingham. There's more multifamily, there's more apartments and that kind of stuff. So you got to be careful. Yeah, just because somebody builds one doesn't mean there's more demand.
Anybody else have any questions?
Yeah. How do you deal with no pays, collection, and legal?
Since you're on it, I'm gonna let you answer that one.
I'm the management part of this. Yeah, so, and we have the Alabama self-storage lien law. And that allows us to overlock a unit, whatever your lease says. If someone doesn't pay, you can put another lock on the unit and lock them out after three to 5 days, depending on what your lease says. And then if you give proper notice, and there are several time periods that you have to give the proper notice, after 30 days notice, if they hadn't paid, you can cut their lock and take a video of what's in there with a witness, and then have advertised for, I think, 2 or 3 weeks in the newspaper or some valid advertising source, and you can actually do a lien sale, and if enough money is collected, then you get paid for that. And if you get more than what they owe, it's reimbursed to the tenant. If you can't find the tenant, you hold the money for, I think, a year or 2 years, and then you have to submit it to the state.
This is kind of, she runs her business off of storage facilities, and the negotiating power, this is kind of little, they continue to increase the rents on the storage facilities that we have, that we run. Is there any way that the buyer can get some better rates, because, when they continue to go up, and we've been there for many years, how can we, and they say, oh, it's systemized and all that, and they give that kind of, I know that there's a way that do that, but is that more of something that we could request to say, hey, look, we've been with these people for this long, we've done everything right, take care of the facility, and can we negotiate then as a renter?
Yeah, talk to them and ask for a 1-year lock on whatever rent you're paying.
Yeah.
Or your power in negotiating is that you could move and go to another facility. Are you renting in Mobile or Baldwin County?
Baldwin County.
Baldwin County. It's a little harder to do here because the competition's not that great. But the way the big boxes do it, that would be Public Storage and Life and CubeSmart, and they will give you a teaser rate right now. And in Mobile, it's as low as $66 for something that should have been $165 or $175. And then you're in there 2 or 3 months, lo and behold, you get a $60 increase. A few months later, you get another increase. So if you're renting in this market as a tenant, you'd want to have ask them to give you at least a 1-year rate lock, so that they won't agree not to go up on you during that time. But that's the way value is created, by going up. Airlines go up, hotels go up, but you just have to negotiate it. You can, in most cases. Or you can move. You come to one of our stores, we give you a rate lock.
Different asset classes within the storage industry. I've worked on projects where a client bought a series of grocery stores that were going out of business, and they're putting self-storage. This is in the Birmingham area. And I've looked at the facilities, seen what it's all about, and what goes through my mind is this a good investment versus building new out of the ground? And then the other thought of an asset class that we see locally in this market and on the beach is all of these RVs and boat storage, and they're big, really nice units.
Right.
How is that class What are you seeing? Because I just drive by and go, I wonder if that's doing well. What are you seeing, and are those good investments?
Well, with the RV and boat storage, if you drive through there and it looks like they're 90% rented, most of them don't want to sell it. So they're doing well, particularly at the beach. When you go down the Beach Express and the toy boxes on the left, and some of you might know the owners of that, but Sharon has worked with them, and they're doing really well there. They have inside storage there for boats and RVs, right? Mm-hmm. And then, of course, they have one in Daphne that's not doing quite so well, but has really nice boat and RV storage. And there's one on 55, I've forgotten the name of it. But I drove by there the other day and kind of blind shopped the manager. And they looks like they're 90% rented, and they're open air but covered on the top, and really nice facility. And I think they do well as a lot of these car washes and coffee shops. But again, there's going to be too many of all of those, and that's what happens to storage. So you have to be careful in your feasibility for storage or whatever you're doing, and particularly boat and RV. You want to be somewhere on that path to the water. And the one in Daphne on 55, that's a really great site there because there's so many houses being built, and a lot of people have boats. You know, and one of the rules of thumb in storage is about 10 square feet per person, and that can change. So if you have 5,000 people in your market area and you have no competition, then you could have demand for 50,000 square feet. So there are rules of thumb like that you can follow for self-storage, and I'm sure that apply also for boat and RV storage. You know, it's all about the statistics and the math.
Say that again, 10 square feet?
Yeah, per capita.
And some of the the boat and RV facilities, people run their business out of them. I mean, the landscapers keep all their supplies, run their business, the fencing company and that sort of thing. So it's not all just boats and RVs.
Yeah.
So
In Gulf Shores, it's all the maid services.
right. And I know, like, one of them looked at Hazel's had 4 of them filled up with their stuff.
So it's funny story. I was a flipper, the guy that bought all the grocery stores. You might know what I'm talking about. But he flips about 250 houses a year in Birmingham. And he was complaining because he has all his materials all over Birmingham, like all at different facilities. And I kind of commented to him, why don't you go build a self-storage for yourself?
Yeah.
He didn't say a thing. The next year, he did.
Yeah.
And he bought 7, you know what I'm talking about.
Yeah.
He bought 7 grocery stores, and I think 3 of them are empty, and 3 of them are, he's doing them one a year and building out storage facilities into each one.
Yeah.
Is that type of structure? I kind of look at that whole thing and go, is that a good place for money? If you got a good deal on the big box?
Yes and no. For instance, in Tillman's Corner, someone did that. I think it's called Easy Storage or something.
It's managed by Extra Space.
Yeah, but at any rate, I think the rent-up's been kind of slow because that area is overbuilt. But, and on the contrary, in Centronelle, a friend of mine from college that I ran into again, and I think Sharon has talked to him, they took an old rundown shopping center that he bought for peanuts, and the parking lot, the site work's done, and they put a nice several rows of storage, climate control and non-climate, and retrofitted the old shopping center and made a nice property out of it. So, but it has a lot to do with what the demand is in that area. You know, just because it's cheaper to develop, if you don't have the demand, it's still not going to work. And that's an art. I mean, it's a science too, but you don't know. The wild card is you don't know if you're developing. I'll give you an example. We own Grand Slam Storage on what is it, Hillcrest and Greelot. And we had 75,000 square feet there, and we decided we'd build 46,000 more. Well, by the time before we got ours finished, this company in Louisiana put 125,000 square feet, a quarter mile down the road. Another guy put 35,000. So, and you don't know what somebody would come in. This guy clearly didn't do his homework, but he's very wealthy, and he'll just wait it out. So as a result of that, rates have gone, initial rates have dropped, to 50% of what they were. But then they're like the big boxes. They'll give you a bump every 2 or 3 months. So we had to make our rates less to compete with them to continue to get tenants.
So in that situation there, where you were building before you got finished with construction, all these places pop up, now you have an extra 200,000 square foot of storage available to a population that may not support that. How do you compete and dominate, or not? How do you compete with your competitors? Like how do you outperform them?
That's a good question. They, as well as us, we use revenue management. It's automatic software that scrubs the websites every night to see what people are renting for. And you can tell the program to see what the rents are at your competition. And they do it to us, we do it to them. Mm-hmm. So we know what their rentals are and what they're asking every night. And we have parameters and logarithms that, algorithms, I guess you'd say, not logarithms, that tell us what the rent, suggest what the rent should be. And so, and sometimes I don't like that because I don't want to go that low. So I may do a variation of what they're doing, where they're say, for a $175 unit, they might rent it for 66, and then in 2 months they're going to bump it way up, and I might rent it for 125 and tell them, we'll give you a rate lock for a year, and we're not going to go up on you every 3 months like some of them. I'm not saying everybody does that, but that's kind of the game now, because that's where you increase value. So they come in. This guy came in without any regard for what the true demand is. And he just says, we've done it. I've talked to him many times. We come in, and he's got like 50 of them nationwide. We come in, we get a good location, we take the market, and then we go up and we do great. And so somebody suffers from that.
So if somebody approached you and they had a few acres that they had been thinking about self-storage, and they're like, I don't really know where to start or what to do next, and they heard about you guys, how would that conversation proceed from there?
What would be the question from the new guy?
Just looking to underwrite to see like a feasibility study, how to go about getting a feasibility study, how to start looking at supply and demand in the area.
Yeah. You could give us a call. One of the things I would suggest is if you're really interested in self-storage, join the Alabama Self-Storage Association. I think it's $150 a year, and it gives you access to a lot of things self-storage. It also gives you ability to go to the meetings, which are 2 or 3 times a year, and you'll meet people who are in storage and you'll learn a lot from them. There are a couple of guys I learned from, and they were willing to share, and so I've passed that along by sharing my knowledge with people who want to get into it.
We could do a comparative market analysis or study. It kind of shows you what's going on in the area, rental rates and that sort of thing.
So all in for somebody like this new person in, what are you looking at for a startup cost on something like that from going ground up? You mentioned the startup cost would be like around 10 million?
No, I gave an example for a 100,000 square foot building. So you can start, for people who want to get into it, start small like I did. And you can also get partners, which is what I did because I didn't have money starting out, not much anyhow. So, you might want to start with a 25,000 square foot building. And, you might have a couple of million in that, and you can borrow over half of that. You can manage it with one of these, totally remote management. Someone has to go by and check on the property every day to make sure and sweep out units and whatnot. But the technology's evolved so that it's really easy to manage these now. But any of you who have follow-up questions, we'd be glad to meet with you and talk with you. Because even though we have overbuilding in the area, there's probably still some places, not just Mobile and Baldwin, maybe in Baldwin or some other communities where you can go out and build some. Or the best thing to do when you're starting out is go buy one and find one that maybe has not been properly managed. I've got my eye on one now that I'm thinking about. It's not being properly managed. And that's what everybody wants, one that's not being managed well. When I get it, I'll call you. And so where you can bring in management and do a lot better job than some people are doing. And therefore you can get better rents, better income, better valuation. Yeah. But down on that end, I know you're far away from us. Any questions down that end? Okay. I guess, Stuart, you're up next.
We touched on some of it, so it might be.
Not gonna get off that easy.
I'm passing the fuzzy.
So what I was going to talk a little bit about is what we've been touching on, some of the supply and demand and overbuilding that we've seen. And the housing impact on self-storage is significant because typically 25% of the storage business comes from people buying and selling real estate. A lot of realtors in here. With interest rates being a little bit higher over the last couple of years, it's had a negative impact on some of the occupancy and demand because with less mobility, there's less demand for storage. And in some instances, some facilities, some of the ones we own, and some of the ones we've seen and have valued have had significant decreases in their occupancy and demand. So now you add on top of that what we've talked about, a significant increase in the supply of storage is a kind of a double whammy. And for instance, we talked about this in Mobile. There's been 300,000 plus rentable square feet facilities dumped on the market. And frankly, it wasn't needed. So in effect, it hurts everyone. Just last week, I was up in the Jackson, Mississippi market visiting with an owner of a facility, and they had converted, it was a former Winn-Dixie. They converted back in 2009, 10, the economy was awful. We actually tried to sell it for them back then, and I mean, the market was dead. Since then, they have done phenomenal. They've built out the second floor. It's about 71,000 rentable square feet there. However, not a brand new multi-story facility just opened within the last several months, not even a half a mile from that facility that's 75,000 rentable square feet. On top of that, somebody bought an existing non-climate controlled facility and they're building 3-story all climate control, which is around 80,000 square feet. And that's 1.47 miles down the road from it. While it's a growing area, I mean, it's going to take a lot of houses, rooftops, a lot of people to absorb all of that supply. And, my message to him was, Bill and I were talking about it yesterday. If you're looking to get out, now's the time to get out. The value is around $10 million in today's market. But if you fast forward and all this supply, it's going to be hurting because when your occupancy goes down, your income's going down. Therefore, your value's going down. Another example, over in Pace and Milton, Bill and I were talking to an owner that owns a facility. It's relatively new. They're about 50% occupied. They've got a new facility just down the road from them that is in, it doesn't have quite the visibility that their facility has. And this guy happened to be at the facility the other day and somebody was moving out. He said, hey, is your house ready? Why are you moving out? And they said, well, actually, we're getting a cheaper rate down the street and they're going to lock us in for 2 years. And so that hurts them. And I think, the gamble, I think that facility locking in that rate is they're trying to increase their occupancy. So they're going to give somebody a rate cut just to get them in there. And like we talked about some of these large operators, and just because you see a Public Storage or a CubeSmart or Extra Space, that doesn't mean they own them. They do third-party management for owners as well. But these teaser rates get you in there for $65, and then 2 months later you're getting a rate increase, which just kind of upsets people. But, it's not all doom and gloom. I mean, I think we've talked about it. There are pockets out there where storage, there probably is a demand, and I've already touched on this. Get somebody to do a feasibility study, pay someone the $5,000, $7,000, whatever it is, before you go make a financial suicide decision and get in a real mess. And those feasibility studies, we don't do those like Sharon mentioned. We can do competition studies that gives you the rates and the facilities that are in the area. A lot of people want, they're wanting to get, well, what's the occupancies of these facilities? And, Bill, you tell the managers of your stores, don't give that kind of information out. I've seen and know people that'll go rent a unit at a facility just to get access and go count locks and see how, kind of get a ballpark figure of what that is. So I guess, in closure, there's opportunities out there, but, there's also some challenges that the storage business is facing.
What are you seeing down in the Foley area in Baldwin County, south?
A lot of storage.
A lot of storage.
Yeah, but there's also a lot of growth. Bill, you sold one that he owned back in 2004.
In 2004 or recently?
No, 2004. He sold that one, and then we were looking at that market back in 2008 for somebody, and the amount of storage just was ridiculous. But then again, fast forward, and they did, they've leased up, but once again, hot market, people start building more storage.
Yeah, now there is a lot of.
The key is to find an underserved market, and there are those out there. You just got to look a little bit harder for them.
The size of the investment for these properties, some are one story, some are 2 or 3. What are the differences and challenges in going up with larger facilities versus just 1 story? And are there economies to scale to doing 1 story?
Well, the cost for one thing, multi-story, you got to have elevators. Elevator, you got to have a separate, phone contract with the elevator. And then, obviously, if it's a densely populated area and there's not much available land, it makes sense to go up. Now, to build a multi-story out in the middle, in Alberta or somewhere, it probably doesn't make that much sense because land, you can get land cheaper.
Do you ever see storage being put into high-rise buildings with like multi-use, like apartment buildings and retail, and then a floor or 2 would be self-storage? I'm just kind of thinking out of the box a little bit here.
The Meridian, I don't know where their storage is, but the Meridian over in Mobile, if you rent, I think, a 2-bedroom, you have a storage facility. But I don't know where the storage is, if it's on.
I think it's on site.
Is it on site? But I don't know exactly where it is, if it's, below or attached or what.
Yeah, I think in larger cities with the population is a lot more dense, you would see more of that. But some apartments now do offer storage. They got smart.
Yeah, I've seen that. I used
yeah.
to, a few years ago, we were renting in Foley, and they added storage like for boats. No, it was what's it called? It was it's right off of County Road 20.
Oh, 20? Yeah.
Yeah.
The one on 12 did it too, the reserves of Foley.
And they have the boat storage and
right.
And extra space,
garage,
which is rather than real simple.
I'm working on a 68-story building in downtown Chicago. They're thinking of doing 2 or 3 stories of the adaptive reuse with storage. And they haven't made the commitment, but they're playing with it.
Are you doing the cost seg for them or what?
I'm doing cost seg 179D, this drywall product, and partial asset disposition for the whole building.
Oh, cool.
$220 million. I'm saving them $75 million.
Yeah. Let's talk about cost seg after this.
We work with my company already.
I know it. But I just want to compare notes with you.
My son and his family lived in Savannah for a while. They moved to it because of his job. And at the place that they lived, they had storage that you could rent there on site. And, it was optional, but it was great for them because whatever you wouldn't go in storage, you just walk over and get it. And it was as reasonable as anywhere else. So most people that were, thinking I'm gonna probably be here a year or two, they put stuff in there.
If it's the same investor,
It was a win-win.
it's a win-win because you've got the value for the apartments and you can charge more for the rent for the apartments. And it just kind of flows back and forth.
But the convenience for them was well worth it.
Can you talk a little bit about some of the management best practices that you've observed over the years? And maybe the difference between having a third-party manager versus non-third-party manager?
Oh.
And if you want to sprinkle in what you're seeing in AI and management.
Okay, I'll try. Yeah, I think, Maura, that, repeat that question again.
Basically, management best practices and maybe how you're seeing technology impact that.
Okay. Yeah, there are a lot of good management companies now. In '07, when the recession came, we formed a management company because there were very few people doing it then. As the recession started, Public Storage and everybody else got into management. And you need to have, 15 at least properties to make it profit, to make any money out of it. Probably 50 or more if you talk to friends of mine who manage 200. So it's actually probably, if you have a big property and you're not skilled and seasoned in management, it's probably better to hire a management company. But for small properties, that you can do that yourself. You can do it with a cell phone. So as far as AI goes, we use a company called Veritech, and there's another one, forgotten the name of it, that does a lot of that, and it uses basically AI to tell you what the rent should be. Also, AI could, these bots, what do you call them, chat bots, you can use AI for that, so you can answer the questions with that. So when someone's renting a unit, talk with the chat bots and they'll answer your questions. I think there's some other applications too, for even using telephone calls with AI. As you know, with AI, it's interesting that you can make a video of a person and get their voice and duplicate that and have them to say whatever you want to say, and you'd never know the difference. But I don't know a lot about AI. I find it fascinating. I think I told you, Maura, earlier that with AI, when I first started doing it, when it first came out, that first chat GPT, that I would do for my friends, I'd do like a obituary and then send it to them, to be funny. And then I would do like a big biography or resume or something for people. And I did one on myself, and it didn't come up with everything it wanted, so it started telling lies. And it had me doing these articles. I was in the Army as a chemical officer, and it said, Bill Barnhill has written books about how to use your Army experience to develop self-storage. It had chemistry things I'd never done. It just makes it up.
Well, you've heard of that case study that AI made up, right?
I don't know which one you're talking
Okay, I
about.
was just talking to a lawyer back in Texas that my family's friends with, and he's saying that they've restricted AI in the office because they had to do they presented a case study, and instead of just doing it themselves, they had AI do it, and AI made up the entire case study.
Yeah, and I have friends that teach college and high school, and the kids will use AI to do a report, and they actually have software to detect who's using AI. Y'all probably know about that. But it's fascinating, and gosh, when I can remember when there was no internet, and we had fax machines, and before that, pagers, and to live long enough to see all this, and what's going to be coming in the future, AI's the next internet, if you will, and there's going to be something after that that many of you will live to see.
Changes every week.
It does. And most of you probably know they have the AI meeting Don't they usually have it Fridays
Yeah,
here?
usually every other Friday, if you guys are into AI, they have an AI working group, usually at 3:30 PM every other Friday here. It's really good. Kai Green runs it and it's really good. I forget if it's this Friday or not.
Can you send that information out?
Yeah, I'll post it, yeah.
All right, great.
It's really, really good.
I was thinking about
Is it just AI or is it focused in the real estate?
No, nothing to do with real estate, all AI. Yeah. Yeah, it's
Yeah.
really, really
Yeah.
good.
I have a feeling there's a lot of unanswered questions, and I mentioned earlier on what she posted, what Maura posted on the Facebook. We'd be glad to answer questions later if you want to. We have business cards, and I think there's a package there that tells about Argus. And feel free to call any of us, and we'd be glad to follow up with you.
Thank you for your time today.
Thank you
All
guys
right.
so much.
Thank you.
I don't know how to turn that off. So I'm gonna...
Here you go, we'll give that back to you.
Thank you.
Thanks.
Make sure to eat the food, guys. It's not gonna eat itself.
I had a few. One of them has a spice cake too.